call the meeting to order. It is 5:09 p.m. This is the Personnel and Finance Joint Committee meeting. The first order of business that we will be discussing is the CEP food service application. And Angela, did you want to touch on this for that?
Actually, we're going to start with the joint personnel and.
Oh, did I jump to the wrong meeting? Oh.
I'm so sorry.
Which is
I did, I grabbed the wrong agenda.
high deductible plan.
Yeah.
Do we have a guest?
But yes, we've brought
I was looking at
Luann Boya from USI to share with us some information that we've been discussing inside the district over the last couple of years regarding adding in consideration for a high deductible health plan option in addition to our PPO traditional healthcare options. So, I don't know if you wanted to say anything before we turn it over, but otherwise
I'm just gonna give her, oh, she's got more. I was gonna get off my topic.
All right, well, thank you, Joyce and Angela. My name is Luann Boyer, and I work for USI Insurance. We have been a consultant for Manitowoc School District for about 20 years now, and we advise on the benefits, the costs, the plans in place for the employees and staff here. And we've been talking a lot about adding another plan option for the district employees. Currently, there's one option, and if you are a new employee, everybody elects that option. It's $1,000 single deductible, $2,000 family deductible, and then there's some co-pays attached to that. What a lot of other districts are doing, especially for sure in the private market, is either adding another plan, a high deductible health plan, which can lower the cost of that. The trend is a little bit better. So we just wanted to educate the joint committee here on why that might be something that Manitowoc wants to do. And then with hopes that that would be recommended to the board to add that additional plan design for January 1st. You may ask why we're coming so early. Typically, when you add a plan like that, there's a lot of education that has to be involved with educating the staff, how the plan is different, how they can set up a health savings account, things like that. The majority of you probably are familiar with the high deductible health plan, and you may even have that coverage through your employer, for example. So I put together a little agenda, and you can see there on page 2 again, we're just going to discuss adding that as an additional option, not replacing the current plan, and then also to discuss the trend and what future savings could be available for the district. So how the plan works is currently, as I mentioned, there are co-pays associated with the benefits. With the high deductible plan, everything goes to the deductible and then the out-of-pocket max. So you no longer have co-pays associated with that. As I mentioned, a number of your area districts have that already as an option or have that as the only option available. So basically it offers the ability to set aside additional pre-tax dollars through a health savings account. Are you guys familiar with the health savings account? It looks like, so I don't have to educate everybody. Everybody knows what that plan is. Perfect. So if you're on that plan, you have the ability to set aside those dollars. As I mentioned, a lot of your area districts have this type of plan in place. It's, not for everybody. That's why there's a lot of education that has to be done with that. But I think from new employees coming into the staff, typically your younger ones may already have coverage through that, may have coverage through their parents' plan, and it may already be a kind of plan like that. So it can really enhance those savings as a employee gets older. It is proven to reduce future trend increases. So as you know, the cost of medical prescription drugs are skyrocketing. And right now when we do calculations, we say that a medical service from this day a year from now is probably increasing anywhere from 7 to 8%. So the cost of what you have done now is going to be that additional cost. Prescription drugs is roughly about 9%. I'm sure you realize how expensive those are. So typically when you're covered under a high deductible health plan, those trend increases are mitigated a little bit because the employee is responsible for everything towards the deductible. Once their out-of-pocket is met, then their claims are paid at 100%. But typically those types of plans run anywhere from 3 to 5%. Overall, the district has done a great job with having some minimum increases on the current plan. We think this will help the district financially moving forward to help some of those trends as we go into 2 and 3 years down the road. One of the plans that we're looking at offering, and on page 3 there you'll see a terminology, and we'll go through the annual limits, but a high deductible plan can either have an embedded deductible or a non-embedded deductible. The current plan has a embedded deductible. A lot of the plans that you may have that you're covered under is probably a non-embedded deductible, which means if you have a family, you have a true family deductible and a true family out-of-pocket to meet. An embedded deductible makes it a little bit easier for an employee because one member of that family, if they have some high-cost claims, they can still meet their individual deductible. So it makes it a little bit more attractive that as an employee, they want to pick that plan because there is a protection if they have one member that is ill. Oftentimes when you see members or employees with high-cost claims, it's typically one member within a family. So this can actually help protect that family by not having such a high deductible or high out-of-pocket. You can see there on the next page for January 1st of 2023, what are some of the requirements? So the high deductible health plan minimum deductible, you'll see there for 2023 is $1,500 for a single, $3,000 for a family. When we embed the deductible, it actually becomes a $3,000, $6,000 scenario, which I'll show you on the next page. But you can see there an Hsa contribution limit is going up actually pretty good for 2023, where a single person, if they have single coverage, can put $3,850, that's $3,850 into the health savings account over the course of the year, and a family can put in $7,750. This is the first time that those limits are increasing by that much. Typically, they increase annually by 50 on a single and 100 on a family. So this year, the government is substantially adding in or being able to set aside more dollars, which obviously helps more people save towards their expenses and also their potential retirement. So on the next page, what we've done is we've shown you what an option might look like. If this option were to be added to the district's plan. So you'll see there the current plan, again, as I mentioned, there's a single deductible of $1,000, $2,000 for family. The medical out-of-pocket maximum amount is $4,000 for a single, $8,000 for a family. There is an emergency room copayment, and then you can see there's copays for prescription drugs. Under option 1 and option 2, which are basically the same other than the co-insurance is different. One pays at 80% and one pays at 90% after the deductible. You can see the savings in the cost of a premium, what that could be. So if you look at the actuarial value from your current plan to option 2, there's a negative 12.5%. What that means is basically, if everybody chose that new plan to be offered and that plan was option 2, the premium savings would be 12.5%. If we show maybe a 10% movement in that population, where 10% of your employees would graduate or move over to this option, there would be savings of about $141,000. But what we want to do is we want to make sure that we can encourage employees and possibly incent employees to be able to move to this option. So when we show the $141,000, it's really not savings to the district. It would be savings that would allow the district to incent those people to pick that plan. And maybe it's the district putting money into the employee's savings account. Maybe the district pays a little bit more in that premium share from the employee, but it just gives members the incentive because we know that overall trend in that plan is going to be cheaper. And 3 to 5 years from now, that high deductible health plan, it wouldn't surprise me if everybody would be under a plan like that within a district. Typically, that's what the school districts do. They offer this as a choice. And then, for instance, West of here did this, I think, 3 years ago, and we already have 30% of their population under that high deductible health plan. So there's other districts around here, Hilbert, Wrightstown, all do a form of incentivizing people to take that plan, because it does overall save the district dollars. So basically, I'm here to talk to you about offering that plan as an option, just as a secondary option. And it's up to us and Joyce and Angela to work out a plan to incent those members to be able to take that plan. They certainly by no means have to take it, but there would be some financial incentive.
Yeah, this might be a question for Angela. Does the district pay for any of the premiums now, or is that all on the staff? How's
The
that?
staff pays, at 13%, and then we pay the balance of that right now, so 87% of the premium.
Okay, so the district wouldn't get any savings if they opted for that?
Yep, what we want to do though, so when you look at the out-of-pocket maximum, so currently the out-of-pocket maximum is 4,000, 8,000. The out-of-pocket maximum on this new plan could be 6,000, 12,000. So just saving of the premium may not have an employee switch to that plan. So we would possibly incentivize them. So maybe where they pay 13% of the current plan, maybe they only pay 9% of this new plan, and the district pays a little bit more to encourage people to take that plan, because the out-of-pockets are a little bit higher.
So how would that, I'm just trying to understand, if more staff went to the plan that you're presenting here, in the long run, would that reduce the overall cost of the district? Because
It would be a lower trend, so we would see that being overall, probably you would see the savings come through in probably year 2 or year 3, when everybody is already gravitated to that plan and the trend is lower. Year 1, you're probably not going to see the 141,000, because we're going to use that to either change the contribution on that new plan or put money into the health savings account for those employees that choose that plan that we know has a hugely lower trend.
Like do a match up to the first
Correct.
$1,000 or $1,500.
Yeah, maybe the employee puts 1,500 in, and then the district puts 1,500.
Yeah.
Typically, that lasts for a year or 2.
yeah, I just want to make sure I understood this right, because I thought I heard that the savings you're showing here would be more for the staff and not for the district, right?
Nope, the savings here are basically in overall premium, overall claims. So if the district did nothing to incentivize people to take that plan, and we had 10% of the people take that plan, there would be savings of 141,000. But we know that if an employee, you were given the choice between the current plan and this new plan, you probably would make that choice to go to the high deductible.
Yeah, really, I'm just trying to understand, if we did this, how much money would the district save in 3 years? And is it 141,000, or is it something else?
Yep, it's probably a little bit less than that, because by year 3, we would have a lower trend, or should have a lower trend. So I would say by year 3, we would see probably savings overall for that 140,000 or so.
Okay.
But not initially under the first year, because we are needing to gravitate and put members and try to incent them to take that.
That initial savings, you would have to use that to do something to incentivize them to move over, like a match or something like that.
Into their health, into their HSA.
Correct.
Right, in their HSA.
Correct.
So that is,
you
they
use
have.
that savings to incentivize people to move to that.
Did you say that some districts only offer HSA plan?
Correct. So if there's a district that typically would have had, they would have offered choice, and then within 3 years, everybody was on that plan anyway, then they would just get rid of the current co-pay plan. But, typically, say in a 3-year period, West Appear's got 30%, Wrightstown, Hilbert has just that high deductible health plan, because everybody has gravitated towards that
Over a period.
over a period of a couple of years. Correct.
And there's a tremendous amount of flexibility and creativity we could use to shape that HSA. So we could do a matching, or we could do a little bit of a higher amount in the first year or 2 to try to get people to opt for that plan. When I worked in Valders, we offered both plans, and so a lot of people, it's a tricky concept to get used to, because it's an FSA. You have that 15 and a half months to use an FSA, where in the HSA you have it forever. So if you have a great healthcare year, that keeps rolling forward, and you can get interest and Associated Bank even could add investment options, we could do a matching plan. So with the changes of cost, we have a lot of, we need the permission to be able to kind of look at different options of how we would present it, but there's ways to sort of close that gap and make it where it looks like really daunting and scary, because a lot of our, our whole teaching, or our whole entire staff, not just our teachers, are used to that traditional type of healthcare coverage. It's just kind of a different frame of mind, and knowing that you can't go into the hospital January 1 and spend your whole FSA total, you have to have it in pockets. We could also do it too, where we give some of the money in January and then some in September. We did that to protect ourselves financially when I was in Valor, so then if like someone leaves, you didn't give them the full amount. Or we could say it's really important for us to try to get people on there and give the full amount the first year. There's a lot of options.
So, now, 2 questions. We had the number of employees that we have listed here is 605. Is that currently how many employees take our insurance currently? And then the other question to that is has the district employees, have they been approached, and has there been any discussion currently to kind of get a feel for how their reception would be to this as well?
We have not done that. We have not, reached out to see. We're just, the main considerations that are coming, really to the forefront. We're self-insured as a district, so we collect both what the district contributes to the insurance and the employee, and it goes into a pot. Our claims, our prescription coverage, everything goes up and up and up. I think we're at 1.8%, so we're running where our percentages are running higher than what we're putting in our fund and everything too. So we're just running into a point where financially we have to look for different options, because we're not going to be able to sustain it at the rate that it's going right now. We also don't have I know while the scope of this is on the high deductible health plan, we do not have any spousal surcharges, which are sort of standard in the industry, or just throughout for many employers right now. So what happens, and that's great because it makes it a stronger benefit for us, and while we want that, we're at a greater financial exposure, because people will say, well, that plan is way, way better than ours, so we're gonna all go on that plan, and then we're covering a full family, so we can adjust with our premium sort of schedule. We could adjust it to, be a greater benefit for the employee, and then if they add the family on, that they still can and enjoy those great benefits, but they have to do it at a greater share than maybe just a single employee comes onto the plan. So we haven't gone to the employees, but we just keep, analyzing the fiscal piece of it, and we're going over.
Right, and, we're just looking to add this as an option for January 1st, and all of you know what a high deductible is. All of you have coverage under that. We want the ability to bring that to the employees, and even if we have low participation, it's not any out-of-pocket cost that we're gonna have. We would hope 10% if we really structure it correctly, and then that would increase to help with those future costs, being that you are self-funded.
Matt, did you have something?
Thank you very much. You did a very good job presenting. It was very clear and concise. In noting that, I would like to make a discussion about it. So we all know the financial situation we're heading into, and what we've had in the past is great, and we've been trying to provide for our staff as much as possible. However, with the financial costs continuing to rise, this is a great option and it's how we present it to our staff. It is really how the work is going to have to be done, because we're giving, with an HSA portfolio, they can move that money around into different things. So that's why she's leaning on this early, so the education can be done, so we can fully educate the staff to understand their mobility with their own money. And that's really how we can present it, as being a viable option to help secure their employment for long term because of the situation we're going through. with the market and how things are just becoming harder and harder to pay for. So it's just something that we have to kind of start transitioning in. And if we do it on the front side with education and trying to give them the freedom to move around their money, is probably the best way that we should move forward. That's just my statement. Thank you for your time.
I just want to say thank you for coming up with an option and something that sounds positive for our district. But I have a kind of a cynical question to ask you. What is the advantage to USI? Because you would be offering this if there wasn't an advantage on the other side of things.
There's absolutely no advantage to us. If you choose Associated Bank as the HSA partner, there's no admin fees. So we are just here to educate, like we work with all of our districts. So I don't make any more money. In fact, we'll be spending a lot of time together working on the premiums and stuff, but we want to make sure that the district is viable, that your employees have a great option. I sat through the personnel committee, so I know some of what those struggles are. We want to make sure that we're able to, offer a plan design that other districts are offering, that they can get at somebody so that your plan designs really match the other districts around the area.
I wasn't expecting that. That's a great answer.
I have one more comment. So we have the ability, if we do the incentive advising, we can maneuver as a district to try to allocate that money around more flexible than ever, compared to if we just don't do it. So I think we're giving the flexibility to the district and we're giving the flexibility to the staff member is what they're trying to do.
Yeah, I guess the only comment I would add to that is, or question, are there any other plans that could yield greater savings over time that may be an option for staff? Speaking from my own experience, I know I have some younger employees at my company that go with the higher deductible plans. I'm not an insurance guru, but I know generally speaking, it's a more attractive option for people that are better health. So I was just curious if you guys have anything beyond what you're showing us here, or is this kind of a?
No, there's ways to do significant savings, but you would be bringing a family deductible up to $15,000, which is, my opinion, way too high. None of the districts have those plans that high, but you are correct. A lot of your young families that realize that they can save money in an HSA, that they're healthy, they're going to elect this type of plan. If you have an employee with maybe some high-cost medications where they're familiar with taking a copay, this plan would be a little bit more difficult for them. You may save some money, but the education piece has to be there. So you're right, typically you would see those younger families, those single people electing this plan because ultimately this plan will cost them less than the current plan will.
What's the premium for all our plans?
That the staff member pays?
Well, yeah, when we say we're paying
$250 for, real close,
Yeah.
$250.
Oh, yeah, because we talk about this when we offer to.
Oh, yeah,
so
go ahead.
Right now, if an employee takes family coverage, their portion of the premium is $259 per month, $259 and some cents.
That's great.
Yeah, I mean,
I would check.
school districts, yeah, and if you're an employee that takes a single plan, it's $98 and a month.
And again, the district cost is what?
13 or 87.
Help me, Angela.
I want to say $1,700 the district kicks in for that benefit right now.
And with this one, their premium
For a
would be
family and then.
family and single?
Correct.
So
That would be
30%.
single family and it would be less.
You don't know
So
what it would be, but it'd be less.
it would be less. If we decide to put money into the HSA, that premium might be up a little bit, but it would be, let's say, half of that.
For the single, right?
About $657 the district's putting in for a single health plan at this time, $1,738 for
Family per month.
for
So,
families.
Angela, seeing as how we are currently self-insured, have we explored how, and I hear what you're saying as far as claims expenses and how our fund is operating and how healthy it is. Have we explored a rise in rates and when that last took place as a counter as well? Because this is a great, I mean, to as many things as possible, yeah.
Yes, no, we, when we discuss, even Mark will sit in on the discussions when we finalize rates, we've always talked about doing a steady increase, because if you say, well, we're gonna hold it steady, then you have to, if you have a major increase you have to make, then it's just that much more impactful for everyone, for the district and the employee. I think we raised the rates 5% last year, and right now with the current trend, like we're at 108%, and the goal would be to operate at 92% on the plan. And so just to kind of come into full budget would be an 8% increase, 8 to 10% increase we had looked at, and USI is able to run those numbers again as we get closer to budget, and then they look, historically to kind of help us fine tune what we should budget for that. We have a healthy fund balance. We have $5 million in our fund balance, and that would really, that really protects us as we would have to come to the boards for approval to use that to cover if our expenses go way over. If we have a really, really bad year, that's what it's specifically set aside for. We're required to do at least 3 months of claims expense. And I increased it a little bit last year, and so we wouldn't have to increase it for a little while. But still, you never want to operate off of your fund balance, so.
So what then would be happening with that fund balance? Would that then does that have to be then directed in a certain manner? It's noted a certain manner balance sheets so that it's noted in just reserved for healthcare coverage for our self-insured plans. A separate one for dental. It is part of our entire fund balance, so it's within the full amount though. So it's earmarked?
Yeah, so we really want to keep increasing with the trends that we're seeing, and it's just kind of the thought as we increase and then maybe do a little bit of a design with premium incentives for people who take like the high deductible versus the traditional plan, and to see if we can, find some savings overall. We could, as a district, say in 3 years, we're not gonna offer the traditional, or we could leave it open-ended at this time and kind of see where things go. That would, I don't know if it's.
No, and you're right. I mean, obviously with the trend with other districts, it's very common typically to see the 87-13% split. I think school districts are required to have that as part of Act 10 from 12 years ago. Other districts do different things. Some districts will have a lower starting pay and better benefits versus, like I consider managed by, you've got a very rich benefit plan and you're able to as well do that. So districts do different things, but that 87-13% split is the most common.
Does anybody else have anything for?
I'm just wondering if it would be beneficial before we bring this to solidify what those benefits are going to be so that we're all on the same page of what those are. But because my thought is we pass it today and then you guys come up with something and then we have no idea what that incentive is. So I'm wondering if we wait. I think it's good and I'm in favor of it. I'm just wondering if we can approve the whole package.
The only issue with that is the education for the employees. If you approve the whole package with the rates and what we choose to do in incentive, that's probably going to occur in September. And we already have open enrollment probably in October, November.
For students of the
and so we don't have a way to educate people now. We do have the option too here. We could at least, if you were wanting to do it today, you could at least approve the plan design and the benefits. But what wouldn't be approved yet would be the premiums, the incentives. But we could at least tell the employees that we're going to be offering an additional plan design come January 1st and start holding educational meetings on HSAs and high deductible health.
So would you be able to put forth that education piece pending with a pending approval? I mean, I guess I I understand what Stacy's, advocating for there, and I do think that is wise. Is there a way that we could educate and then approve?
I think we could, that, we would send an email out indicating that we will be offering a high deductible health plan, watch for informational meetings, here's some educational things. I think we should be able to do that, assuming then that the district would at least approve a high deductible health plan, during the meeting in August, September, whatever.
Yeah. And if you guys would prefer that we, before we would finalize, because usually we, when we say, oh, we're gonna, increase rates 4 or 5%, it happens just in a meeting where we, look at things and finalize it internally, we're happy to bring it. If you guys would like to see that, then, or bring some options or, whatever.
Yeah, I'm curious, can you give me some background on, I guess, the relationship with UCI and the school district, like how long that's been in place? And I'm assuming you guys aren't volunteers, so I'm assuming.
Correct. Yep, so, it's been, in excess of 15 years, I think, through the different superintendents. And, you're correct, we get a consulting contract, typically that stays flat. And then, if there's any voluntary benefits, which you guys really don't have, typically there might be commission on that, but it's basically in a commission arrangement. I think the district pays, maybe 60,000. So I'd have to look. We can certainly bring that back, but typically that's the compensation for us to provide the reporting, for us to be able to do this with the district. So,
And really with the increased requirements with ACA compliance, I mean, it's thick. We wouldn't have time to manage all of that on the district level ourselves. So having, our brokerage team, like it's been priceless. So we're very fortunate.
and that includes access to the attorneys as well.
Correct, yes. Yes, we can, there's a hotline where, Joyce can call and ask questions,
So about 60,000 a year is the spend right now. And I guess the other question I had, and again, I'm just making sure we're doing our due diligence, knowing that we're in dire straits financially in the coming years here. Have we, reviewed that compared to what else is out there on the market in recent years, or?
we have not, gone up to bid on that service anytime recently.
Sure. So from my perspective, I would probably be reluctant to approve anything unless we at least knew where the market is at. I'm not saying you guys aren't doing a good job, but I'm just saying if I got to put my name on it, I want to make sure that we know where the market's at today and that we're getting the best deal we can.
Is that a year contract with USI, or how does that work?
Oh,
It's annual.
yeah.
And when do we approve that usually?
I think it's just kind of.
Evergreen. It's an evergreen, so it's just automatically, but
Okay.
I think typically, probably in October or January one effective date, so.
And I don't know offhand, I'm just giving the reality, like if we can look for comparables, but, there's kind of like notice dates and all that kind of stuff that's into that, so we can look into that as well. So,
This is an accurate statement, Angela, from kind of general. So, right, our total district budget is just over 80 million, right?
Yeah.
Give or take. And I believe that health insurance is about 11 or 12 million of that 80 million, give or take, right? But is that, so again,
The 60.
that's a huge, I mean, when you think of our whole district budget is, again, I don't know, if it's 80 million, 81 million, but out of the, thank you. But out of that, 11, 12 million.
It's not even, it's a half of a percent the service, you know what I mean? I mean, that's
Oh, for
very
the.
Yeah.
round, very,
Yeah.
very round, it's.
And that's, but just, it's
Yeah.
incredible what health insurance costs for an organization.
Right, and that's, again, for my seat, I have a company and we've I sent Angela some information on, and I'm not even sure how USI compares to, that PEO model that I sent you, or if that's even viable for public school districts, but, we saved a good chunk of change, and the options for our employees actually, got better in some cases. So I just want to make sure that we're doing our due diligence, and, what we have here today might be the best for the district, but again, just knowing that we're in the situation that we are, I want to make sure that we're at least reviewing the market, doesn't have to be every month, but, at least every couple of years, we got to see what's out there. Yeah.
When do you start doing the education piece right away, or when will that start?
We would start sending emails out now if the board, based on what you had said before, we could at least tell them, we would start educating. We would probably maybe even do a WebEx over the summer if somebody was interested in learning. We have Associated Bank doing things about the investment accounts for the HSA.
And the board wouldn't vote on it until the last meeting of this month, right? So we would have an opportunity to get some greater detail.
Correct.
Yeah.
Sorry, I'm gonna do it, yeah.
So
What I'm hearing is, could we get 3 options of incentivizing the transition? And the only thing I'm worried about with the education is, when I would be educated, I would like to know what the details are for my incentives. So I would be open to saying, let's get on board. We're gonna be probably trying to look into this. But I'd like to, if I was the educator, I would like to give details on how we're saving you money in your transition of doing this. So that's where it's a little foggy, so I think somebody could explain better to me, but
We can
that's.
certainly work together, Angela, based on the 2023 estimated.
Yeah.
Before we have all the claims data and run some numbers, so we can certainly do that.
But I think if we could do it, and then we could get a presentation about our 3 incentive options, or 2, and then we could vote on it, and we can make a good decision for our community.
Yeah.
But I like what I'm
we
hearing.
do have another finance and budget committee meeting on January.
6th.
July 6th. Ooh, I wish nobody's summer here, sorry. So I don't know if, we could have, Lamb and Joyce, I don't know if we should, I understand.
Are you suggesting possibly both
Wait,
of them?
would you like to wait to make a motion until we have the choices, or can we give, sort of the approval to explore, then bring the choices to get those approved separately?
I'd say the second.
I just wanted to say that I'm with Tony on exploring options as far as making sure we're getting the best deal. And that's one of the reasons why we got this man sitting exactly where he's at, because he's good business sense, and that makes sense to me. So, yeah, that's what I see. But it all sounds fantastic.
Yeah,
Great options.
I guess today, the focus, always happy to bring information, we should always be, unpeeling the onion and looking at all the information. Today, the purpose was mainly to explore the high deductible health plan. And I guess I didn't, happy to get the broker information and look into that more.
Well, and I don't think it's going to, oh, I'm sorry. Go ahead.
Go Kathy, sorry.
It's looking at weather. So.
I am, and so I just want to take a pause real quick here. There was a tornado that touched down in Boston, I guess. Now I'm looking at the radar right now. It looks like around just before 7. Our stuff's supposed to be getting, or a little after, right around 7:30. We're looking at some heavy duty weather hitting our
Tornado
area.
touched on where?
Boston, which is west
Yeah,
of.
I know where that
I mean,
is.
I would, if we can, yeah, sorry guys, I know but I do want to make sure everybody's safe too. So.
Yeah.
So my thing is right now that I want to say is like you said, we're here exploring the high deductible, and in my viewpoint, it's another option. It's an option for employees. You're talking about saving money for the district, and I understand we want to know like what some of those incentives might be and how that money is used, but that's not what you're really asking for right now. You're just asking, is using the high deductible an option to go for the employees to have that option?
Correct.
So I would be in favor of that because I think it just makes good sense.
Is that a motion?
I'll make-
Just by the law, I mean, the concept.
Yeah, absolutely, to move forward with the employees giving them the option of having a high deductible option, and which would include savings to the district.
Yep.
So I make that motion.
And that motion is,
That makes sense. I
Yeah.
understand what you're
just
saying.
let they know for the,
It's not specifically
Just
getting
wait-
to this
just wait,
specific, yeah, go ahead.
Right, the option, or, I'm sorry, the motion would be that we would accept the exploration of having an option for our employees for high deductible insurance,
yes.
and which would also include a savings for our school district moving forward.
Is there a second?
A second.
All right. We have a motion, we have a second. All those in favor signify by saying aye.
Aye.
Can I ask a quick question on that?
Sorry, yep, I did move forward too fast. Go ahead, question.
So if we do that, what if we find something better, are we tied to that, or what do the options look like there? If we have-
No, we just
I-
voted on the concept.
Just for exploration.
Oh, all right, so we're not committing that.
We're
We're not committing, no, just exploration.
We're saying we want to go forward and give our employees more.
I'm good with that.
I understand where you're coming from, Tony. Our district has to very carefully consider, we can go out to bid on every single piece of business that we do, but there is a level of time investment into that process, so, I'm not saying we're not willing to do it, we're willing to do it, but we can't sort of conquer the universe in a short amount of time, so, I just want us to be very mindful of that, because, I personally think of, like the load that the business office has to work on. I have pre-audit next week, I'm running into everything in the year. Like if we're gonna go out into a bid process or explore different brokers, you're talking a very huge process, one that we wouldn't wanna take lightly. So I understand that we wanna be as fiscally responsible as possible, I'm 110% on board, but there is a reasonable amount of time for all of it, so I just want us to be mindful and considerate of that,
I
And
would-
maybe, go ahead.
I would just say, I hear what you're saying, and I guess from my perspective, maybe, it's not necessarily just a broker, right? If we're spending 11 or 12 million a year on insurance,
Sure.
is there a better way to do it that may not involve, a company like USI? Maybe there's a different model that we haven't seen or considered, so, I think just given the magnitude of that spend,
Sure.
I think it's worth a conversation. I'm not saying clear your calendar for the next month, and
Yeah.
I'm just saying, let's just.
I am.
Yeah, maybe, at least not initially, right?
Yeah.
I'm just saying if it's worth, I think, a little bit of calendar time, just to make sure that we're dotting the i's, crossing the t's, like, have we done our due diligence, before we just rubber stamp something, especially, one thing, if we're just sitting on a pile of money and didn't know what to do with it, then, probably wouldn't be that big of a deal, but, given our reality, I think it would be prudent to just make sure that we're not,
Stacy and then Kathy.
basically an easy layup, right? And that's what I'm looking for, is somewhere in that spend, there's gotta be layups that we can get some quick wins.
I have two things. One is, Angela, I think what you're coming off of is, we've done this for 15 years and we have no documentation that we've ever looked at any other consultant, right? So I think that's part of the reason where that's coming from.
Sure.
And the second thing that I would say to the committee here in the group is that, again, this is another strategic plan thing, right? Maybe we should have all our bids looked at, every 3 years, every 2 years, every year, and that we have a plan to do that. Because again, it's always like we're kind of blindsided because we don't know the history. We don't know that we've been doing this company for 15 years. The bus, right? No one's really ever asked, I shouldn't say ever, but no one's asked some of those questions. And so I think strategically, I think it's a good idea to, always be looking at that and put that into a strategy of how we can do that. The other thing is I don't hear that, it sounds like our contract renews with USI in October, correct?
Yeah.
So you know, I don't want to say worst case scenario, best case scenario, I'm not sure, but I mean, we have until October even if we wanted to do something different, but right now, we are contracted with them until then. And so if we started planning a, HSA model, or a high deductible model, I don't think that would be, we're still gonna be using them.
Right.
Regardless.
Kathy?
Okay, and the point that I would bring to everyone's attention, I guess especially you, Tony, because you're tracking a lot of business. I'm not a great business person, but I have a great business person in my household. So one of the things that I know that comes with any major changes is a lot of dollars. So if we should switch companies, we're not just talking about, oh, this bid is $10,000 less for administration of overseeing the insurance. We're talking about a complete overhaul of our software and having the dollars that would switch everyone over. So I think, yes, we need to do our due diligence. Maybe I see it in this next year. I see this as the 11th hour before October.
Sure.
But I'm also kind of freaked out about other stuff that the day one of school year too. So, but I mean, like next year, like maybe we start looking at that this year just to make sure. But to me, it just seems really right around the corner, especially if we want to start educating our teachers and we want other information to be educated on. Because the transfer of anything we do differently is going to cost our district a lot. So how many years will that take us to make up for that cost? Do you know what I'm saying? So like, if it costs us $100,000 between software and man hours to flip something, well, that's gonna take us 10 years to come out even versus a $10,000 cheaper bid for admin costs and insurance.
And we have a strong relationship with USI, and you know, the points are all well taken, they're fair, you know, 100%. But you know, if we start looking at that now, we also know that we can count on USI, they know MPSD, they know our plans, the history. I like Stacy's comments about, you know, through a strategic plan, we can put things on a 3-year, I mean, that would be wonderful if I could say like, okay, next year I know I'm gonna have to go out to bid on this. I know I'm gonna have to go on, you know, year 2 is these things, you know, that at least helps.
Well, whether we do anything with that at all, I just think we should be well informed.
Yes.
You know, so I don't think that, you know, I don't think there's any downside to that.
No, and we can certainly help with, if you decide to go up for broker services, we can assist with an RFP process. But I will share that that's probably a good 3-month process. By the time you actually get that, you have to, you know, list it through the state of Wisconsin, and there's different parameters about that.
Yeah, so one thing I want to touch on just in my own practice is insurance is a very cyclical, it goes up and down. Premiums will always, you know, they ebb and flow. And one of the things I think Angela touched on it very well was insurance is a relationship business. You're paying for somebody to be in your corner, and that is a very important tool. You can jump ship to another policy, and you can jump ship to another company. But at the end of the day, when you do, you're starting over with that relationship. And sometimes you can potentially get burned. That's just in my own knowledge and practice that I definitely bring to people. Does anybody else have, I guess we do have a motion on the table, so let's get back to that. Is there any more further discussion to the motion?
I would just like to add that, you know, October's, you could do a lot in 4 months. I mean, that's, you know, we got plenty of time to at least look at this. Again, I'm not suggesting we allocate all of Angela's calendar time to this, but I think we can make a few quick phone calls and just do a sanity check. And my other comment would be, I realize that consulting fees not that great, but I'm thinking about this more broadly as far as, you know, we have an $11 to $12 million a year spend, right? So if there's a different way to approach that $11 to $12 million a year spend than working with a consultant, I just want to make sure that we're doing everything we can to, you know, make sure we've turned over every stone and, you know, check every opportunity for that. So it doesn't have to be a formal RFP process. I think I'm just suggesting let's, you know, just do a a market analysis or whatever you want to call it, just to, and I already provided Angela a potential option that could help her, so.
Great.
Yeah.
And so that, I think that could be definitely, that's something that we could possibly, like Stacy had alluded to, bring into the strategic plan as well. So I think that, when we do, and, go down the road of our strategic plan, maybe we do include that in there. So, as part of the looking into our different
And
things.
we can do that too, but, that, again, could be done by the end of the year. So maybe my pace is just a little bit more than what people are used to around here, but, I'm just suggesting, let's not close the door on this opportunity prematurely, and
Yep, and I do have your contact and I can reach out to them, and so, yeah, no,
thank you.
it's always good to, it's never bad to collect information. I mean, it's, and data is power, yes. I just don't ever want you guys to think that, I always want to collect as much as we can, but there is sort of a practicality of time.
I think voting on the concept doesn't bind us to any.
Nope, it doesn't. So, with that being said, is there any further discussion for motions?
I just
For the
think,
motion?
well, I know, I hate to belabor this, but I think I'm going to say, I'm gonna vote no, but only because I think it's very hard to educate somebody when we don't have the facts. Like, I'm not quite sure how you're going to present this to them and them not wanting to know the incentive to get on board with it yet. So
I don't think that's what we're voting for.
Well, we're not, that's what I'm saying, that's not, so
Yeah,
what I envision happening is, we're gonna present the HSA plan, and there's still gonna be either we're gonna explain to them that this is another option, but then further down the road, it's either gonna be implemented without any say of the
This is just an
incentives.
exploratory.
But
Isn't it just an exploratory?
No.
So, pause just a second. Can you read back the motion just so we can get a clarification?
Yeah, I mean, we could, I think, we would just like to know that we have the blessing, we can put a package together, whether it be just within a month. If we can take it to we could make sure that we bring a finite package to the board for approval before the education would start. Would that be fair? I think that's kind of is that kind of?
Yeah, that's kind of what I got under the impression as to how Kathy explained it.
Yeah.
That's why something's getting more specific as to what you were talking about. I can understand that, but I think this is more, I understood it as
We're not
just
buying anything.
giving us the blessing to do
I
this.
understand what you want to know, what they're going to be offered in comparison to be able to see where it really stacks up, and so that you can, if you get a call from an employee, you can talk to it.
Yeah.
Right, and I guess
Can we get the
what,
motion as to find out what that is actually? Can I get that back?
Oh,
What is the motion?
I didn't write down the exact motion, so, I just have to move forward with, to the full Board of Education to offer a high deductible health plan.
Okay. So that's what the motion is right now.
right, and what I'm saying is traditionally in this district, well, I'll tell you what's gonna happen, is that this is going to go as education, and all this stuff is going to be decided what these incentives are, and we're not gonna get any information about that. So today, right now, what you are saying is that whatever they decide is the incentives and the premiums and everything else, that's all you're gonna hear about it, unless we say something different today. That's all I'm saying.
That would be the
It's,
motion.
okay, but that's,
I understand what she's coming from.
Yeah.
In reality,
it's the reality of this motion.
Could
This,
we-
this motion isn't just, we're gonna talk to them about HSAs. Why would anyone wanna spend their summer talking about an HSA, and maybe, in the future, we might do it, we might not. We're saying we are going to do it, that is going to be an
You think
option, or
that's
we
what the
wouldn't
motion?
even be
You
talking
think
about
that's
it.
what the motion?
Inadvertently.
Says or implies?
Absolutely,
Oh, okay.
absolutely. That is what they wanna know today, that this is going to be an option that we definitely are doing, correct?
Oh,
Can you amend?
yeah,
the
well,
motion
I can.
To what you think would be,
Just to clarify, is that what you're looking for, that if this goes to the full board, that it will be an option?
Could we have it revise the motion and throw this out there to provide us the opportunity to design a high deductible health plan option.
Three
And
options
bring
for
in-
incentive.
You want 3 different options.
Just.
I guess I'm just wanting, I'm not wording it very well, but you know.
This is just a
Okay,
process.
so I'm gonna bring this back in. All right, Kathy, this is your motion. Do you have any, would you be open to a change of your motion?
Yes, I would. I will amend my motion, and hopefully I will say this the correct way, to allowing the design for an HSA for our employees with 3 different options and coming back to our committee and then to the full board with it. Does that make sense?
The only thing that's wrong is it's not just an H, it's
High deductible.
high deductible.
Or sorry,
HDE.
sorry.
Thank you.
High
With
deductible.
HSA, okay, let me read out what I got.
Okay.
To allow the design of 3, or a high deductible health plan with HSA with 3 options. Well, sorry.
Incentive option.
Who's second?
3 incentive options, yeah.
Who seconded it?
Yeah.
Matt, are you friendly to that?
Paul,
Paul, are you friendly to that?
Yes.
All right.
Yeah, I totally, I agree with everything that's going on here, and I understand where she's coming from. So this is making a clarification that we are not opening up the book here, allowing everything to go through. We're allowing this to proceed for them to design this and come back to us with that.
It's saying we're friendly to the idea, we're open to it, we just want to know more.
Yes.
All right, and then,
I don't think,
Sorry, can I read it one more time? Just
Yes.
because I don't think they have it 100%, I want to make sure we're good. Allow the design for a high deductible health plan with HSA with 3 incentive options for board approval.
no, for the committee.
Well, so that's the other thing. We don't need to make a motion in a second if it's not going to the full board, right? So if you wanted to stay at the committee level.
yeah, then it's just they're coming back to it.
Yeah,
There's no action being done.
Do we want it to come back to it?
We're not gonna be prepared to make a recommendation to the board until we see all that stuff and decide on.
That's exactly what I'm
That's
saying,
what-
but
Okay, so
that's,
we don't
but
have to make a
that's.
formal motion because we're not ready to go to the full board
There's
yet.
no action taken.
Okay,
Correct, right.
So we have your blessing, is that you're blessing to design 3
That's what we're gonna
options.
do.
Absolutely.
And then,
Yes.
okay,
We would love you to, and I don't see us not voting for this.
Right.
I just think that we need more of those pieces so we can say, absolutely, send this,
I think the final vote
we
is
recommend it.
gonna come back to, it would end up at the board, correct? So this is something that you guys as executive committee could call and say, we want to bring this to the board, or whatever it is.
Well, it'll come back to the.
We don't have to have this double committee, you know what I mean?
I think you probably would maybe want to know,
Yeah.
I mean, I think since
I don't know
it's,
what's so complicated about this. I mean, I
it's
think
personnel and.
we really, we haven't understood.
We're trying to.
We don't need to.
Unless you see, well, I don't know, I shouldn't speak for others.
We have an understanding and we want some information. We want, you know,
Correct.
we want to provoke, we want a thicker, more fleshed out proposal.
All right, so then we don't, I mean, there is a motion. Do you want to rescind your motion? Seeing as how there's,
I rescind my motion and give a blessing instead.
all right.
All right.
So then we have a directive from the committee to move forward and allow design of an HDSA with 3 options to be brought before this joint committee down the road.
We didn't
Cool.
take any motion, so really no.
It's just a
No,
directive. Yeah,
we're
no
just
motion.
telling-
But I think
We're all in
Motion
agreement,
rescinded.
go for it.
Motion rescinded.
But, you know,
Move forward and come
what the motion would otherwise be, has to be in the minutes.
Yeah,
So there has to be a record of what our expectations are. And,
Correct.
you know,
Yeah, it's-
yeah,
it's
or the
done. It
direction
happens.
to make 3 different
Yeah.
options, yeah.
A confidence.
So if there's no more, no further on the high deductible plan option, that was discussed, I'd like to move forward
That was
with
it.
the paraprofessional wage adjustment.
Thank you, Luann.
Thank you.
Yeah,
Appreciate it.
Drive safe,
Thank you.
thank you, wherever you're traveling to.
Back to the valley.
Okay, drive very safe.
Wrong direction.
Uh-oh.
So, paraprofessional wage adjustment, it was brought forward, there was some concerns that were brought to the board from a variety of different individuals that are employees of the district. There just seems to be some confusion as to how it was rolled out, what it was all. So we wanted to have this discussion to get some more details into what it is that we're doing.
Well, I would only say that the only one that was put on the agenda, that was paraprofessional.
The paraprofessional wage adjustment, right?
Right,
Yes, correct, not the others, it was strictly paraprofessional.
right.
Right,
I think some of what we'll talk about with the paraprofessional wage adjustment in many ways applies to all, like, common confusion from all groups. So, which I think is, coming into the district, my second time advancing all the wages, it's not a simple process and not simple to understand, but it's a basic formula, but complex if you don't live in it. So when we brought to the board in, was it March or April? I can't remember now. The market adjustment for paraprofessionals, it was a 21% adjustment from the bottom of the current scale up and then 5% higher, okay? So I think where the main confusion that's come in is people thought that their wage X was gonna be increased 21% exactly, boom, new wage. That's what the perception, I think, and the confusion that has come across for many people. And so if I do it all again, I would be extra crystal clear, that it's not the individual wages risen 20%, 21%, but that the salary schedule itself was brought up. So what happens is, as people are hired over long, many periods of time. So Joyce and I had a nice conversation with several paraprofessionals this afternoon, this morning, for tomorrow morning. We have another session where they came in and a lot of the same questions are coming up. The hard part is that all of our advancements for all of our employee groups happen on the base wage. So when you're hired, your base wage is established, okay? Then the CPI adjustment comes in every year, and that is multiplied by that base wage, and that base wage is carried forward. That base wage increase does not include an increase, the percentage isn't taken on the steps as well, it's just on that base increase. So let's say you have a base of $12, and then you have a base increase added to that, but then you also have $3 in steps, so you have like $15 total that you're receiving. Your increase is only on the $12.
Yeah.
And then that amount carries forward. So when they see, for all, and that's statutory, like for what the district was required to do, through Act 10, it's just mandatory that we did an increase not to exceed CPI. Am I saying that right?
Yeah.
And CPI is just like historically out of hand, but just high, right? Over the last 10 years, it's been maybe the max it's been is 2.5%, 2.4, but then, a lot of, it's 4.7 was the rate this year. Most districts were not able to allow that, so we did 3% for all the employee groups. And then since we raised the paraprofessionals up 5%, that schedule, we gave their base increase to be 5% to kind of push them ahead a little bit more. So when doing the adjustment, we took their old base and steps and made sure that they were at least on the new schedule. So if for some reason someone was making their prior base, prior steps, and their base increase this year, let's say it was, I'll put something up here right now. Let's say the minimum wage was $14.50, and those three numbers combined brought them to $14.25. They were automatically bumped up to $14.50. Okay, and so that was just the adjusted wage for this year. And then there are premiums if they work with students with disabilities, and then if they have what's called a PDA certification, is a 25% premium as well on top of that wage. So that's where many of the staff felt that they were going to get a 21% increase just based on the true wage itself.
So if they were making $16, they thought they were going to get a 21% increase from the $16.
I don't know if everyone did, but I think some
Some did,
thought
yeah.
yeah.
So then with that, I guess the question that I would have is, it sounded like, a lot of the people thought, there like several complaints were that somebody that's just entering the district is now making somebody very similar to somebody that's been here for a tenured amount of time. has it been evaluated, a possibility of a cap increase to kind of do that market adjustment to allow for that not to happen? And what the impact of that would have been? A cap increase, because obviously if you have, we're all operating under the same cap, all right? All we did is bump up some of those people that might have been capped off. It's just bringing them closer to the ceiling, that's all. So has it been adjusted or considered to bump up that ceiling a little higher so that way then there still is that tenured feeling, or I don't even know if it's the proper word, the seniority of their pay being impactful? Has that been evaluated and looked at?
We looked at, when we processed the adjustments, initially, there's just, I worked with our former business manager, Ken Mishler. He happened to be in the office, and it's just hard because everyone's at different spots, and you have people that are hired more recently, and the base starting wage is just higher,
Right.
And so it's not, there's not like a one and done easy way to do it for everyone. I know what you're saying. And we could have done something where we said everyone that's here previously would at least get 25 cents over what the new starting wage was. Like the maximum for someone who had been here was a certain amount. We just, didn't consider that when we brought it forward. And not that we couldn't have or still couldn't. What we did do though, is, the base wage is a really critical piece, bigger than people realize. So when we saw and kind of were anticipating some of the questions, we decided, kind of at the 11th hour to see what would it cost to change the base years moving forward, okay? So someone could potentially have a base. We had someone that was at a base of like $11, okay? And so like someone getting hired at $14.50, their percentage increase is just gonna be that much more behind going forward forever, right? And so what we decided, what we considered was creating a new base. So often when like someone will move to, I'll finish this and let's say someone moves from being an associate principal to a principal, okay? So Joyce will work her magic, as she always does, and she'll discuss the amount, and they'll get moved to their new starting wage, and then their steps will wipe out, okay? So then, they start adding steps after that, okay? So like what we thought would be the best way to kind of give people credit for their time is to move the base. So if they had like a $13 base and their new minimum was $14.50, to honor what their adjusted wage would become their new base. So the initial increase cost $530,000. And to change that base is gonna cost another $180,000 next year. So I'm very sorry. You've been
Under this,
patiently, I'm sorry.
no, you're saying it's gonna be an additional 180 on next year's budget as it is currently, correct?
Because we told them we would give them a new base, so we felt, when we looked at the numbers, we were like,
It's beneficial to I know they don't see it right now, but it's beneficial to those employees that have been here a while, whose base is just lower than what you're bringing together.
And so someone who is, just getting their increase and they're just new to the district now is gonna still get increase at the same amount, but the people that have been here historically won't be receiving significantly less increases compared to ones that are hired more recently. So,
it's the other thing that happens and has happened is, again, all positions, have I use that term wage band that I used before. Whether you're the associate principal, the director of HR, there's a minimum and a maximum, and you're somewhere in that. So, so even in the 6 years that I've been here, and primarily because of the labor market and the pool, years ago, I'm talking paras, years ago, you might have, remember, 30 applications for one position or two positions. So, several years ago, when we were hiring paras, most often, not always, kind of depends on, who you were hiring and their back, all of that. But most often, when we were hiring paras, they were hired at that starting wage, no matter what. No matter what their experience, no matter, and especially I'd say over the last 3 and 4, probably 4 years, but, that we have, because of the market and the availability, we have had to, when we've hired paras over the last 3 years for sure, maybe 4, that when we're hiring them, again, the labor market and the pool, that we have a very, very, very challenging time. If we hire a para and they've got some similar experience, they are likely not taking the job if we offer them the entry level. So, and it's no different than our teachers. When we hire a teacher right out of school, first job, bachelor's degree, we're paying them 44,000, something, If we hire a teacher from another district with 10 years of experience and a bachelor's degree, guess what? They're not coming here for 44, So what we've, again, I don't know the exact one that, up until probably 3, 4 years ago, most of our paras were hired at that starting wage. And over time, again, hiring paras, the labor market, if we started to over the last couple of years, if they've worked in a school before, if they have what I would consider similar experience, maybe they worked at Ascend Services, maybe they worked at the Autism Society, they've been a caregiver and an elder, where we've given them credit for previous years, because again, if we're gonna start them out at that, whatever that minimum, they're not coming, and then we don't have people. And so that has caused some disparity, and I get it, some angst with some of our employees who have been here. I've been here 10 years, you hired somebody that they're making 25 cents less than me.
Sure.
And, as a bit,
So
It's
I
hard.
guess as a,
so we're trying to level the playing field with some of this.
Yeah.
is there and maybe the communication that you're having in these meetings, has that been well received? Or is there something else that we need to do in order to have our, tenured employees that have been here for a while? Is there something else that we need to be considering? Or is it a miscommunication?
I don't know. I guess I would, I'm sorry. You want to say something?
I
don't know. I don't know if it was it's probably a misunderstanding. I don't know if all employees heard 21%, and now they're like, oh my gosh, I'm gonna get 20, no, I don't think anyone ever, I don't think anyone at the committee level, I don't think anyone said, you're getting 21, we were gonna bump up those, because we were just not competitive.
Yeah.
We were more competitive on the top end, so we raised that 5%, but, so I don't know if it's complicated,
And I don't even know if it's the 21, it's the optics of, gosh, I've been here,
Right.
I've been here for this
10
long,
years,
and now you're gonna hire
hire
that same amount.
That's what I would say the most consistent
Right.
message is, and the feeling of value. We value all of our employees and our benefits and everything we work to, give our employees. We take that so seriously. It's the heart of what we do, and it's hard when people look at the dollar amount as the measure of that, and that's not it at all. Really the moving of the base will move some people anywhere from, some it's only like $50, some people it's $3,000 a year, that it's huge. So,
Yeah.
Matthew.
I have a question. I wasn't here when they did the raise stuff. I was
Sure.
out there, so I didn't see all, but I did hear, I mean, I believe it was a 21% that was for the pairs, and 3% for the teachers, and 3% for administration, is that how?
Yes.
It-
Well,
where-
since the top end of the scale went up 5%, we have to do a base increase. So we
For
did
what?
5, you
Are we
know,
talking
like
pairs
of the
right
base
now?
wage. So like the schedule itself, like the starting in the low end and the high end of the range for each category, the low end of that scale went up 21%, and the
Was
high
that
end
for all
went
three
up
sections, or was it just talking paras right now?
just paras.
I just kind of wanted to know, was it
Mhm.
with the administrators and with the teachers, was it a blanket 3%?
3%,
Yeah.
correct. And everyone else
And there
is,
was no distinguishing factor between,
And no base change.
I didn't hear nothing.
Yeah. there
no,
wasn't
no,
any
no
base-
base
no,
change,
no.
like every other group, no other teacher, or no other group, no other employment group is getting a base change. I mean, and while it seems like small cents, when you extrapolate that over, I mean, it's huge. I mean, if anything else, if nothing else, we're gonna get requests from all the other groups to do reestablishment, you know, and that's a huge spend, you know. But that's you know, is kind of part of the market
What I was going
adjustment.
with.
Huh?
It's not really what I was going for. I mean, it's not my question.
Oh,
I was just
I'm
saying that,
sorry, I
like, if
apologize.
it was a blanket for the administration, it was a blanket for the
Right,
teachers,
yeah.
and then it was from what I understood, the way that I heard it in the meeting anyway, I don't know all the ins and outs prior to being on the board, so the way I heard it was gonna work the same for administration, and same for the teachers, and the same for the president.
Yeah, that's what it was.
And that's what I heard, yeah.
Yes, that
So,
is correct.
for me, I'd probably be thinking the same thing that these paraprofessionals are as well, especially with those that have been here for, 10, 18 years, whatever it may be. I would have thought,
But we
They're getting
changed
points.
the rate. We changed the rate.
Matt?
Just real quick, it is the same, it's just they're talking about the base wage.
no, but see, that's the thing, that it does bring those base people up, that's 21% or whatever it may be. And then those people left up on top that are higher than the base are not really getting anything, is that kind of what I understand?
5.
Yeah.
Or they're getting a 5%?
No, so the band, okay, so if we pay starting $12, well, $12 to $16. The $12 got moved up 21%, the 16 got moved to 5. So we changed the whole band,
Right, yeah.
is what happened,
Okay,
Yes.
for
Joyce,
paras.
yeah.
You were gonna say something, did you have something you wanted to add? Okay. Carrie, did you have something that you wanted to say?
That's right.
No, I mean, I've made observations in my mind. I mean, this sort of compression is unavoidable.
That's
I
what
mean,
they
you
call-
can't
that's what they
just, you
call it,
can't remake it, you
No, I didn't
can't
have-
remake,
that's-
you
yeah.
can't remake the whole structure every time you
Yeah.
give a raise. Or, you increase it.
I just was trying to understand.
I mean, we had that in the university where, people that have been there for 20 years and been hired, $10,000. And then, all of a sudden, faculty became more expensive, so people were coming in at higher starting salaries
Right.
than people after 10 years. So people were pissed off, but, geez, you can't remake the state of Wisconsin,
I think again, this just in general. And we have fabulous care professionals. And they work hard, and I mean, I think just in general, a discussion, just move, what are some additional things we only have so much money, right? Unfortunately. We wish we could pay all our staff more, quite honestly. I think, kind of again, that as we do strategic planning, and I will likely be gone, but, I think part of that, we as a district, because the labor shortage is impacting school districts. I don't think we felt it so much 2 or 3, but just in the last 2, and whether it's teachers, parents, it's all over. So I think we have to continue to talk about attracting and retaining. And it's more,
Exactly.
we're doing lots of stuff already, but we just gotta keep talking about
Exactly.
creative things and different, thinking outside the box and.
Can't sit still
They
unless
can't,
it's,
yeah,
getting
we've done
involved.
stuff, but we are in a environment right now where we really just gotta throw everything. And again, what are some things we can do to demonstrate appreciation, value to our employees?
Well, yeah,
That
there's
isn't
usually
gonna,
work.
I mean, there's things you could do that aren't necessarily gonna cost a lot of money, but
I too, I have a couple people here. Matt, did you have your hand up? Kathy, I saw your hand go up. Did you have something? Okay, Tony, go.
Yeah, I was just gonna add, I like where you're going with that, and I think that there may be some opportunity there for us to find some wage opportunities to.
show people
Yeah.
care and value.
And the other comment I would have is, I could see how, staff would be frustrated, right?
I do too.
It's not it's a kind of a bad situation, but, I don't really know if there's an easy answer, because we're limited with funds and, but I do like what you suggested, and I think that's something that we should, consider in that
And maybe
strategic
that's
planning
the
process.
response, maybe, and that's kind of what I was looking for with this, is that as they bring this up to us, that, this is where we're at right now, and that, moving forward, we're going, as part of our strategic plan, we're gonna look at some of these issues and.
I think that, I'm sorry, I think the morale thing is multi-dimensional, it's not just the money.
Right.
I mean, the people that are writing in saying, gee, I'm disappointed that I'm so undervalued and I only got this amount of money. The undervalued part is part of it, more complex sort of thing. So we can't, do lowest and fishes here. We only get the money we get. But I think we can do something to improve the morale in other ways.
There are the research that we all want to get paid a very fair wage, to be sure. We certainly want to make sure we are as competitive as possible, but there are other things that make people feel good about coming to work every day, and again, just more conversation.
Do we do benchmarking of what other districts are doing for attraction and retention?
Yeah, we've done some of that, and
Okay.
I think it's going to become even more. We absolutely do that and purchase, but again, moving forward because of the environment, that is my suggestion, is when the strategic planning is done, that from that part of that is attracting and retaining.
Sure, yeah, I
And
understand.
it's getting harder to attract because the pool is smaller.
Right.
So we have to attract, but what are we gonna do to continue to retain? You're always gonna lose some employees. I mean, we know that, but how do we minimize how many we're gonna lose?
That sounds like the same conversation we've had about teachers the last couple of years.
Yeah, and it's not, I wish I could say different. It's not getting any better. There are less people going into education. Teachers are retiring, or, it's not gonna get any better. I don't know when it's gonna get better. It's not gonna get any better. So the problem's not going away.
All right, I'll make one comment.
Sorry.
I think what we need to do with our younger staff members would be attract them on a higher wage, and then obviously we get more on the benefit side. We attract them on a higher wage, and then they'll obviously hopefully have better health at the time. And we could pay them on the front side, and then hopefully they'll stay. That's what industry's been doing, is in my opinion.
Oh,
Angie, look, Angie, see if she can try to talk as a wait.
Oh, it's okay, I'm sorry. All employees also will be getting, and this is gonna be someone who's been here 25 years and someone who walks in the door, so that's gonna still be, that's still gonna be the point. I understand this, there's no easy way to say you don't get it and you get it and sort it out. But every employee is going to get $1,500 this year, so.
Right. Some people just don't.
And
When
they're
is
not
that?
thinking about that within the calculation. Now, the steps do not carry forward. That is something as a practice, as a district, we would not want to do 2 years in a row.
No.
That's not that's not a great practice, but as a substitute to kind of manage the fiscal cliff and to kind of try to get us through without getting into too much financial trouble, that's how we chose to manage it, and I still stand by that. If you think of your top paid administrator versus your lower paid employees, that $1,500, I know Mark and Joyce and I talk very, very specifically about making sure everyone gets the same amount of money because everyone chips in. That percentage on a lower paid employee versus a higher paid employee Many of them are surpassing by far what they ever would have received for steps this year. Administrators getting less.
So, and for those people that are, watching this virtually, when is the payout of that, going to be taking place?
They're gonna be three times if they get that in November, I believe November, February, and May.
Of 2023?
22 and 23.
All right. Then does anybody have anything else to add to this conversation?
Yeah, I'd just like to add, I think Carrie maybe mentioned this a little bit, but, besides compensation, I think culture is a big part of working at places. So I think, looking at that strategic plan, I think that would be a great opportunity to really hone in on that with our new superintendent. And again, just to piggyback off what Joyce said, I think there's a real opportunity to look at, maybe other perks, right? If we could work with local businesses and find a way to show our teachers and staff that they really are appreciated. I mean, most people, aren't getting into teaching to get rich, right? So it's, they're doing it, you'd like to think everyone here loves children and wants our community to grow in a positive direction. So I think maybe there's an opportunity to work with local businesses to reach out and see if they would be willing to put together special deals for educators or for people in the field. Again, I'm just throwing that out there as an idea, but I think there's ways, I like the idea of thinking that way because
We have to.
yeah, because in my experience too, I mean, comp is important to people, but, feeling valued and that you're heard and that your employers care about you is, that goes a long way too, right? So if you could provide that, I think that,
Having
maybe
your
there's an opportunity.
12-month goal, getting to work from home during the summer months.
It's like, that's a huge
perk.
It really
Yeah,
is for that,
yeah,
for that few weeks in the summer and at Christmas or something. I mean, like, stuff like that doesn't cost us anything.
Right.
And we have found they're still productive.
Yeah.
And they think like, this is great, I can work from home and when I need to come in, I come in.
Right.
Like you said, it doesn't cost us anything.
That being said, anything else to add to the wage adjustment discussion?
Thank you guys for meeting, not that I would expect anything less, but thank you for meeting with the paras and other staff that have questions. And I think that gives me a better idea of some things to say when
When you get an
people.
email,
Yeah.
And then, when we sent out
No, go ahead, that's fine.
I
I just,
Don't be young.
yeah, real quick, you're good. I just wanted to ask real quick, even with the recent wage adjustment, our paraprofessionals are still below that market. Is that a fair assessment?
Yeah.
I would dare,
I didn't think so.
What is our target market? Do we have an established target market?
When I say below market, I'm talking about wages, right?
yeah, well, I think, again, we've talked about, especially those level, the paras, we got level 1s, level 2s, level 3s, and level 4s. A good chunk of our paras are special ed aides, they're in level 2. And I think we definitely wanted to say that with this market adjustment, they need to be at least, that bottom needs to be no less than $15 an hour. And that's what it is right now for a level.
Yeah.
I would think.
The minimum.
What's the lowest level?
That's minimum, not max.
That's the minimum.
Right.
Level
Yeah,
1
that's
is
$15.
13.
For a level 2. And then
I
it's
think
level
for level
3.
1, otherwise, you're talking, they go to McDonald's like that. I'm just saying.
Yeah, right, we had that conversation.
But
Yeah.
can we sustain it? That's the issue.
Yeah,
$12, and we're doing everything we can with the $1,500 bonus right now.
yeah.
We dumped quite a bit in other pockets as well too, prior to where we could have put it at, brought the bottom people up.
But until we're in a better place financially, we've done everything we feel, so I feel confident, having voted for it, that we looked into everything and are doing everything that we can at this moment. Maybe down the road things can change, maybe that strategic plan will help, but right now, we have to be very cautious. And
Oh, I
but
agree.
we've done everything I think that we can at the moment. I mean,
We with the paras and how complicated and the calculate, we anticipated we were going to get questions.
yeah.
So when we
Oh, you
sent
did?
out, so last week, when we sent them their employment letter, in that communication, we said, You know, we are offering you 2 opportunities to come in and meet with us. One was today from 2 to 4, and we probably had 12 or 15, yeah,
Oh,
you know.
did you really?
And then tomorrow morning, there's another opportunity
Oh,
from 8
no.
to 10. Now, again, we figured there's gonna be questions, maybe some angst, and we thought, let's just provide them, you know, at least give them the opportunity to come in and talk to myself and Angela and try to explain it and.
That's really good.
Yeah, you know,
I'll say one comment to defend you. I've read the letters that's sent out to paraprofessionals, and they were very clear. It just, initially though, it's hard to understand because there's a base, and
it's
then there's
very.
multipliers, and there's
yeah.
steps. So like, from being, seeing in the letters, it took me 15 minutes to understand
Absolutely.
the base, and then the add-ons and the steps, and then if there's a premium on top of it. So it seems like the way we could have improved maybe on the front side of communication, but it's not an easy system, so I can see how there's apprehensiveness about why didn't I get a 21% increase? Well, you did, but it didn't go the way you thought it was, because there's multiple pieces to your wage. So I'm just trying to defend you and say that it was, I've read through the stuff, and it is clear, it just clear as mud.
I know, it took me a while, like, huh, yeah.
Yep, so
And that's
I'm
for
just saying,
someone
it's
who
not,
doesn't, yeah.
so I'm sorry that we have to go through this, and
Oh,
our
that's
employees
okay.
aren't mad, and I hope that we can be clear, and thank you for setting the time to have people come and talk to you about it.
Yeah, and I think it begs the question. I wish we weren't, the districts weren't, we have to be fiscal, you know, again, I think it's the conversation. All, whether you're a teacher, a parent, you know, what do we can continue to do as a district to attract, but retain, and some other things that to show our employees we care, whether it's culture, whether it's relationship with your supervisor, whether it's your colleagues, whether it's some work from home opportunities. I mean, because we can only do so much with money. I wish we could do more.
I'm sure group and trees.
Okay.
We're at 1604 average. I just ran the whole column, you know, for the ending wage. I know it doesn't help the lower end, but like that average of our employee wage for paraprofessionals is $2. So they're,
Right, which I think is.
Is that all 4 groups?
that's all for those, you know, so it's not,
Right, it doesn't help level 1, but yeah.
But they're included in the average.
Everyone's.
Supposing the people that come in, right? And that's where we're below market, right?
I think we need to call it quits.
Well, I think I can be excused from this part, but you
I
have
think
more
so.
stuff.
yeah, so we'll have to stop. I'll stop
Yeah,
this and then or we have to
We gotta
adjourn.
get-
I gotta
we
put down a
we
time
go through the
here.
formalities.
Motion to adjourn.
All right, is there a second? All right, all in favor?
We're not gonna.
Aye.
You don't need a vote.
That's
Oh,
that's fine.
that's a non-joint
Finance.
meeting, that's just fine.
Oh, that's just finance, okay, it doesn't involve us.
Thank you.
Oh, okay, that's fine.
Bye, thank you.
Thank you, guys.
Whew.